Welcome back. Business confidence in South Africa is down again, not surprisingly, given the impact of rolling blackouts. The RMB Bureau for Economic Research Business Confidence Index declined for a fifth quarter in a row to reach 27 in the second quarter of this year. To put that into context, it's down by 9 points compared to the first quarter, and it was the lowest level of confidence since 2020. It means only about 27 in 100 respondents from companies are satisfied with prevailing business conditions. We're joined by RMB's Chief Economist, Isaah Mhlanga. Mr. Mhlanga, thank you for being with us. Can you give us some more context? How bad is a figure of 27?
Look, I think if you just take the point you just mentioned now, just over only about a quarter of business executives are satisfied with prevailing business conditions. But in a historical context, every time we have seen business confidence levels of 30 and below for a number of quarters, we have tended to see a contraction in either fixed investment, economic growth, or both, which means we are really in a dangerous zone where we can actually see the economy contracting. Yes, yesterday's print for GDP for the first quarter was positive, but only just marginally positive. But these low confidence levels mean, for Q2 economic growth figures, we would not be surprised to see a negative print. But I think let's just look in terms of the underlying components, which are quite important. The consumer-facing component are the ones that took quite a bit of a hit. New vehicle dealers' confidence contracted by 21 points to 23, which means just over 2 out of 10 executives are satisfied with prevailing business conditions. And then if we look at retailers, also declining significantly by 14 points to 20. And then the other one, which is the third that contracted, is wholesalers, contracting by 8 points to 32. All of the three are now below, at just close to 30 or below 30, which means it's in that dangerous zone. All consumer-facing, obviously because of interest rate increase that we have seen in May, but also cumulatively from when the Reserve Bank started to increase interest rates. Food price inflation has been quite high, and it remains quite high, weighing on the consumer, in addition to no job growth. The other two sectors, building contractors and manufacturers, they remained unchanged at 43 and 17 respectively. And for manufacturers, we are seeing the lowest confidence across all subsectors at 17 index points.
Just looking at the retailers, so you said some of the worst figures coming from the retailers, and I remember some of them were quite resilient even during COVID-19, but I guess we're getting to a point where South Africans only have so much money to spend at the moment, even on essential goods.
Absolutely. We also need to remember that during the pandemic, during COVID, people in general had excess savings. We saw a significant, increase in savings of household in general. Interest rate also was slashed to record lows, which means the debt servicing cost savings which consumers had, they saved all of that, which accumulated into extra money. We didn't have to travel as much. Because you worked from home if you had a job. So all those savings contributed to the resilience of the retail sector. Fast forward past the pandemic, interest rate increase started, inflation continued, started to increase, food price in particular rose. All those started to weigh on the consumer. But within the retail sector, of course, there are some that are doing well, particularly those that are dealing in low-end, products where end to low end. Those retailers will continue to do well, but those that are dealing in high-end products will continue to struggle. But I think if we just look at the weight of the interest rate increase and inflation, we should continue to expect the retail sector to come under significant pressure going forward.
Is there any hope on the horizon, especially that the Reserve Bank has indicated that further interest rate hikes after the slew that we've seen are unlikely?
Look, I'm just going to rephrase your question in the following way in the context of the Business Confidence Index. what needs to happen for us to see a turnaround in business confidence? I think the first one would be the resolution of the diplomatic fallout between the South African government and the US government, which we are going to know for certain around August, because we would have the BRICS summit. If the president of Russia does not show up, South Africa will be spared the burden of having to arrest him, but also the renegotiation of AGOA, where South Africa benefits quite significantly. It's up for renegotiation. The existing agreement lapses in 2025, but the renegotiations start to happen in August. So if South Africa is not kicked out of AGOA, those political risks are going to compress. And if you look at the weakness of the currency that we saw in May, it shot up significantly because of the diplomatic fallout. So if those two events come and pass and South Africa is still part of AGOA and a Russian president doesn't show up, we are going to see a compression that is going to improve sentiment. That's a short term. Over the medium term, we need to see the resolution of load shedding so that corporates can function much longer hours at full capacity without interruptions. That's going to add to confidence. We also need to see a resolution of the logistics issues. The mining sector, the agricultural sector are not able to ship the volumes of production to international markets because logistics does not work. So this speaks to the economic reforms that are currently underway under the Operation Vulindlela, of which we got an update a couple of days ago, which shows only about 45% of those reforms are either completed or partially completed, still needing some further work. We need to see those lifting to 70% completion or even to 100% completion for us to see a sustained improvement in business confidence that's going to attract fixed investment.
How sad that things are so slow. If we look at load shedding, we're also waiting for that 2 years to pass to see some of the new projects come online. But I was asking about the impact of interest rates. I guess even if they stop going up, they'll be stable for a long time and still add that pressure onto consumers.
Absolutely. Our expectations is we have reached a peak as far as interest rates are concerned, but there is still a risk that we might see 1 or 2 increases in interest rates, and that continues to weigh down on confidence. But if we do get a sense that the Reserve Bank is not going to continue to increase interest rates, that might improve confidence. But as the SAB says, they are very highly data dependent, which means they will have to look at every data point and the trends that are coming up to try and determine whether to continue to tighten interest rates or not. But there is also a global aspect where we are continuing to see increasing risk of a US recession. But every time we have a US recession, we tend to see capital outflows from emerging markets. And we're just happening to see a much more severe outflows relative to our peers, which talks to the domestic issues that we currently have. And we need to see a positive catalyst, and that change in confidence will be one of them.
All right. Unfortunately, a lot of dark clouds in sight, and Chief Economist at RMB, Isaah Mhlanga, saying business confidence this low could even mean a recession in South Africa.